future was so bright. The old neighborhood was so alive.
Yo, good morning, ladies and gentlemen. What's up and what's going on, traders? Welcome back and happy money freaking Thursday. Let's get it, team. Let's get fired up. Let's get motivated. Let's get ready to attack this day and have another amazing day in the markets. Super excited to be back. Super excited to work with you. And I'm excited to see what the market has in store for us today. Ladies and gentlemen, there is opportunity in this market. So make sure you're coming in. Make sure you're getting prepared and make sure you're making it happen each and every day, right? Tap into this community, lean into this community, ask for help, reach out to me. Again, just show up like you have been. Keep moving the needle every single day. Use everything here and let's crush it, guys. Let's crush it. There's a lot of opportunity in this market right now today, tomorrow, next week. Again, there's a lot of great opportunity, guys. I don't know what else to say besides I'm excited to be here and take advantage of the opportunity and make it happen with the best team out there, baby. Everybody inside this community, you make it the best and you know who you are. It's everybody. So hit me with that big ol' Alpha Day Trading. Good morning. If you haven't done so yet, who's inside of chat? Who is ready to rock and roll? You got AJ Trends in the house. What's up, dude? Mr. Stir, what's up? Josie Trader, Adam, Michelle, Steve. The Sizzler. He's sizzling out here with profits this week. I love it. Corey, what's up, dude? Mr. Allen, Steve, Joey. Ooh, there's way too many people inside of chat. I cannot list off all the names. I am out of breath. Anita. What's up, Anita? Good morning. Giovanni, what's up, brother man? Good morning. And then everybody over on YouTube right now, what's up, guys? And girls, right? And ladies, what's up, everybody? We got Kevin, Ruben, Johnny, Joe Wood. What's up, Joe? Sean, Brent, and Saul. Good morning, everybody over on the tube. Let's dive into it, guys. Let's not waste any time. I know we have a lot to talk about today. We got a lot to talk about today. So let's start with the pre-market rundown, right? The next 30 minutes, pre-market rundown. What are your top stocks for the day? What's on your watch list? What are you looking at? What do you need some help with? I'll come in, do some due diligence, analyze everything unbiasedly. I'll take a very unbiased approach and just review everything, get some levels established, and give you my recommendation on the stock. What do I see? What do I notice to make sure you're dialed in, ready to rock and roll for the day? Even if I'm not watching that stock, I want to make sure that you guys are set, ready to rock for the day. So, what stocks are you watching? What stocks do you need a review on? Let's dive into it. Right now starts the pre-market rundown. Pre-market rundown. We got to have some kind of cool little overlay. That'd be cool. Anytime I say, and right now starts the pre-market rundown, you got this cool overlay. Like, boom, we're live. Let's go. Can we look at good old bro's got some good energy? You know me, baby. It's all about that morning routine. Just fires me up. Let's go. Yeah, so AMC did have was it a 1 to 10 or was it a 1 to 20? It was a 1 to 10. Yeah, it was a 1 to 10 reverse stock split on AMC. Yesterday, the stock was trading at like $2. Yeah, and that's why we saw that split. We're around 20 bucks now on AMC. So it's a split. I'm still bearish on AMC based on the daily. I'm kind of bearish on it. It wasn't shortable yesterday, most likely due to the upcoming split. So my broker probably restricted shorts just due to the split for protection. So, you know, what I want to do here on AMC is I want to go back and mark up this key level. This is the key level that we had identified just yesterday. And I was giving you guys the example in the breakdown of just look at prior day lows and closes, right? Those are going to be really good areas to look for entries, to the upside, to the downside. Doesn't really matter. If you have a lot of, momentum and a lot of pressure to the downside, what you can do is just mark up the prior day low and close. If the stock opens and fails to break that prior day low and close, you can see a continuation move on down, right? And that's what we saw here on Tuesday, right? We couldn't break Monday's low of day and close. We got rejected, continuation day down, right? Yesterday, we could not break above the prior day low and close. We dropped on off a little bit more as well. So I want to mark up these two levels, these prior day lows and closes, right? These zones of support resistance from the daily. And then I want to do the same thing here. I want to go down and mark up yesterday's low of day. And in this case, it's going to be yesterday's open. So you can see we're going to have some resistance between 21.74 and 22.48. And we're going to have some support or resistance. It really depends on where AMC is at right now in pre-market. I have no idea. I haven't even looked at the stock in pre-market, but there's going to be this lower zone, support resistance from the daily between 1940 and 1950. And then what we want to do is go back and look left and mark up even more levels that we identify. So this was an area that I was watching just yesterday. I was coming back into a lot of these daily lows right here and just connecting the dots, right? That's all I'm doing is I'm connecting the dots, right? We have some support, 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 lots of support, lots of support. So I can see that this is going to be a pretty key zone here on AMC is down between this 1488 to 1541 level, right? We can see that there's just a lot of touch points here on AMC inside of the zone in the past. So this is going to be a pretty key zone as well. Now, is there anything else between like 15 and 19 from the daily? Again, you just got to look left and really just try and gauge like those key levels, right? And so I'm seeing this high, this low. So I'm looking at these 2 points here, right? We had this pullback low prior to a bounce. We got rejected here as well as resistance. Look left. It's also some prior support resistance as well. So I want to start by marking up this zone right here. And you can see there's a lot of touch points, right? We have a gap down, high a day. Okay, we got above it, tried to hold a few days of support. Back below it is resistance. Back below it is resistance. A lot of resistance right here as well. So we see just in this area, go back in 2020, is that 2020? Is that 2019? I don't even know. That's in 20. Yeah, that's in 2020. So we're just looking at this, area in early 2020 of all this, prior support resistance we had. Then we come a little bit more recent. We can see there was resistance, support, support, resistance, support, resistance, right? We see that level's been tapped several times in the past. So that's going to be another key zone that I want to throw on up and, really just pay attention. And that zone is going to be between like 1779 and 1818. So I feel pretty confident in these levels. I feel pretty confident in this overhead level, this lower level, and these two other lower levels. Again, just looking back in the left and going back, looking at past chart history. And so these are like some of the highest probability levels that I'm noticing here on AMC's daily time frame. So I've done my due diligence. I've done my preparation, marked up all my levels. Now it's time to go into our lower time frame, make those minor adjustments, and see if there's anything that really stands out to us. So right into a 5-minute, and let's see if anything stands out, right? Well, right now, we can see that teeny weeny little zone right here between, 1940 and 1950 was simply yesterday's low of day and close. We're below that level. We're actually already pushing below that one daily level that we saw here on the daily between, 1779 and 1880. And we see that this level was respected. You see how we came down to the top end of that zone? We bounced, how we came right below it. And then the second we fell below it, we actually hit the bottom end of that zone as resistance. And then we're starting to fall even more. So it's really cool to see, like, we went right to the daily, marked up these daily zones and these daily levels, high probability areas, right? And it's pretty cool to see how it was honored as support, the upper end of that zone, and then it was honored here as resistance, the lower end of that zone. So this area is being respected. So here's the deal. Like, we are going to be gapping up, it looks like. We're gapping down below this zone of daily resistance. And so here's the deal. That's going to be your line in the sand. Okay, that's going to be your initial line in the sand here on AMC. So it looks like we're going to be opening below that zone of resistance. If we can see a push into that zone and we fail to break above and move higher, I would expect to see AMC start to fade and fall down to its next lower zone of daily support, which is this lower zone that we identified between 1488 and 1541. So that would be the next area to the downside. I would expect to see AMC go. If we do indeed open below this zone of resistance and stay below that zone. But here's the deal. Right? I don't want to be biased. I don't want to be like, oh, I'm just going to look for the short today and then completely miss a good long. You know what I mean? So I want to have a good long plan in place as well. And so with this being your line in the sand, that's your make or break level. And like I said, if it comes into that zone and can't break through it and we start to roll on over, that's going to give you confirmation to short AMC to the downside today. But if we actually push above that zone and we see it turning into support, then we could see AMC pushing back up into that next zone of resistance, yesterday's open and yesterday's low of day as well. And that zone will be between 1940 and 1950, right? So we can see like one of two things are going to play on out, right? We're going to either open, push into the zone as resistance and fall. That's going to indicate you're short. Or we're going to open, possibly push into the zone and hold above it as support. And if we see that taking place and we have a good long setup, then we know that AMC has potential to get to that 1940 to 1950 level. Okay, so your main area to keep on watch is this initial zone between 1779 and 1818 today on AMC. And as you guys can see, AMC is on the watch list because I do want to keep it on watch. It was something I looked at yesterday and today as well. The split's done, right? It's already taken effect. And so maybe these shares are easy to borrow once again, or at least locatable. And if we see that good short setup today on AMC, I wouldn't be opposed to getting short down towards around that lower zone. That could put you into the low 15s on AMC, guys. All right. So that is going to be my 2 cents. They're an AMC, taking a deep dive into it, right? They just had a 1-to-10 reverse stock split. This stock has been getting absolutely just destroyed to the downside. Lots of momentum on down. We're gapping down again today. So we're gapping down today. If we fail to get back above this initial zone of resistance, I believe that we can see another drop on off. Okay, but if we do get above that initial zone of resistance, it turns support, then we at least know we have potential to get back up into yesterday's low of day and open, just like we did here the past couple of days, right? We got up into the prior day, low and close. We got rejected. We fell. Yesterday, we gapped down a lot, did we not? There was a big gap down. What did AMC do? It pushed on up into the prior day, low of day, and closed, got rejected and fell. So I know that if we end up pushing on up, right, we have potential into the prior day, low of day. And in this case, the open, that's going to be a key level of resistance. And that's another area that if we get to, I would still consider a short, right? So like I said, we could open on up, push above the zone, hold as support, and get up here towards around that 1950. That's a key level of resistance. If we ever see it up at that level of resistance and we top out and we fail to break above, that's another high probability area to look to get short if we ever get up towards around that 1940 to 1950 level, okay? So out of the gate, sit back, relax. Let's see what let's see what AMC is able to do between this 1779 to 1818 zone, and we'll go from there. But that's going to be the main area that you should keep on watch today here with AMC. The Sizzler. I love how many newcomers we are getting inside of the community daily, knowing that this community will change everything you do, not only trading, but with your daily life and mindset. Welcome to the team. I love it. The Sizzler, always showing up, always positive, always motivated. I love it. He's going to be our motivational speaker. I just know it. We're gonna hire him on. He's just gonna be nothing but motivation. Motivation. I love it. Inspiration as well. The Sizzler. Good morning, boss. Watching good old Amazon today. Let's go take a look at Amazon today. I did go through my entire watch list like I normally do, and Amazon was one of the ones that just didn't really stand out to me. But let's go ahead, unbiasedly take a look at it and see what we have here today on Amazon. Okay, I'm not gonna watch it, but let's see. So, okay, so the first thing I'm noticing is obviously all of this overhead. Possible resistance support. Depends on where Amazon's at intraday, but I notice a lot of this daily support resistance prior to that. A little bit of that drop on off here. And if we zoom this back out, we also could draw it down a little bit, connect the dots here, but that's a pretty big zone. That's going to be a key level coming on up. Depends on where we're at, obviously. But let's get that zone identified and marked up. Let's go mark up some of these prior highs as well. So we got that spiking high down into those highs. That's a pretty good zone as well, right? Spiking high, rejection, rejection, rejection. That's 3 times. Close into it, right? Gap down the next day, rip into it, get rejected, we dump. So that's going to be a key level overhead as well. And then I would come back down into these lows, and I would connect that high as well. So we're going to get this high in here, that high, before that drop on off. We have this pullback low where we bounced, we gapped down, got rejected, we got above it, held a support. That's going to be another key zone as well. Let me go ahead and label off these zones real quick. The lower zone of, whether it's support or resistance. Again, we don't know if it's support or resistance because I don't know where Amazon is intraday and pre-market. So these are just going to be your zones of support resistance from the daily. Lower zone, 133.19 to 133.89. We can see that this is going to be a pretty key level here on Amazon. I mean, we've hit this level several times, and we've made moves away from it. So that's going to be a pretty key zone. Your next area is between 137 and 137.30. And then the level after that's between 140.44 and 141.32. Okay? And those are the clearest areas that really just stand out to me. So let's go see where Amazon's at right now. So we've just been kind of chopping inside of that initial zone that we identified. We've just been really more or less just sitting sideways, right at this level. So here's what I want to do is I want to see if we can bring this level down. Like, we know that's going to be a pretty key area, but there's also some of these lower or these highs here as well that I want to get connected on up. So let's go ahead and get into some of these points right here, right? High day rejection, spiking high rejection, high rejection, high rejection. Yesterday's high day, a little bit of a rejection. So that's going to be a pretty clear zone as well. But this zone right above that we're looking at is still pretty obvious and pretty clear. So let's get those initial zones marked up. We can see that this initial zone here between 137 and 137.30 in pre-market, we're just kind of chopping around it. Our next lower level of support, that zone is going to be between 135.62 and 136.10. And then if we fall below that zone, then we know we can come back down towards around that 133.19 to 133.89. I like this zone on the daily. It really stands out to me, but I don't like how we're just chopping around it here in pre-market. I'm not a fan of that. So keep this lower zone on high watch out of the gate, 135.62 to 136.10. If we see that zone hold on up today as support, we know we have some room back into this initial zone here, right from the daily, right into these lows. And honestly, if we're looking to play Amazon long, if the SPY and the Qs are still ripping to the upside, if everything's having another nice green day, and we eventually, expect to see Amazon get back up into the 140s, like, we definitely need to see a break and hold over that zone, right, between 137 and 137.30. So, like, could we be involved in Amazon prior to something like this happening and that next leg on up into the 140s? Yep. If we come down into this lower zone and we hold it to support today, that's between 135.62 and 136.10. We hold that level of support. We already know that we have great potential to see Amazon up towards around that next zone of resistance between 137 and 137.30. If we ever see a nice break and hold over that zone, that's when we could see Amazon starting to get back up into the 140s. All right, so I would keep this, and let's label it like a little purple box. All right, let's change our color here. Let's change that to purple. Right? And we know that that's going to be a key area to really be watching today on Amazon. And again, I mean, high a day, 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 right? We've hit this level several times and we've gotten rejected. We've gotten rejected. We've gotten rejected. So we know that's going to be a pretty clear level, okay? And then we know that if that zone ever cracks, our next key zone is down here. And where is that at? That's all the way down between like 133.19 to 133.89. So I'm going to call this your line in the sand. Right? So this little purple zone that we've been discussing, that's going to be your line in the sand today. Right? If we come on down and hold above that, we definitely have potential to move on up, maybe even break and hold that overhead zone that we're chopping in right now in pre-market and start to see the next run up into the 140s. However, if, again, we come below that zone and then we see it turn resistance, that's when we have potential to come back down into yesterday's low of day, that lower zone between 133 and 133.89 there on Amazon. So I would just really put a lot of focus, if it were me, right at this little zone that we have identified with it's purple now. That's your line in the sand. That's your make or break. I would like to see if Amazon could get down into that zone and just really see what happens at that point in time. And maybe there's an opportunity for a trade. But even if we don't make it down here, we could see Amazon eventually just get a nice push above this zone here. At some point, pull back into it intraday and hold it as support. So even if we don't make it down to this zone, we just break and hold this upper level, then hey, that's still good confirmation to look to take Amazon long up into the 140 today. But if we ever, again, we ever fall below this main line in the sand zone on Amazon, stay below it, hold below it, there is good potential to fall back down into the mid 133s. They're on Amazon. So, I mean, that's what I notice. Again, just these key areas, these key zones of support resistance right from the daily. And then you guys know me. I just sit back and wait for the market to come to me into one of these zones, present me with some sort of trading opportunity, and then I go from there and build a plan and attack it if there's a good reason to get in. All right, so that's how I would look to get prepared and really establish these levels for today. They're on Amazon. And then we got BA, good old Boeing. Boing. What's going on with the good old BA? All right, so first thing I'm going to do is go right into these highs right here and these daily lows. So let's connect the dots. Look at that. Beautiful stuff. Let's change this back to the default templates. Right, we got low a day, low day, low day bounce. Right, we got low a day, we tried the hold. We got rejected off that zone, we dumped. We just came back into it as resistance. And we're starting to notice a little bit of this daily topping price action. We've gotten back into this prior zone of daily support. We cracked below it. Now we're retesting that zone as resistance. And we've had 2 days back-to-back of hitting it, getting a little bit of rejection. Yesterday, we hit it. We got a nice big rejection there. So, yeah, that's going to be our key zone of resistance here on BA is between 130.04 and 130.78 is your main zone of resistance here on BA. If we're looking at, our next area of support, I'm going to go back down into Tuesday's low of day and yesterday's low of day and connect these two lows of day. Right, that's again Tuesday's low of day and yesterday's low of day. That zone of support or resistance. Again, I don't know what the stock looks like in pre-market where we're at, but this is going to be a great zone of support resistance on the daily. That's between 226.93 and 227.11, and then you just want to continue to rinse and repeat and just continue to identify these key areas where we can see the stock get to. Right, and then the next area is going to be all the way back down around that 50 SMA, right, which is also spiking high where we got rejected. Is our gap up low of day and our gap up open before that massive push. And we actually pulled back into that zone here just last Friday and had a really solid bounce. So we can see that's going to be a very key level down here between 221.55 and 222.20. We know that this is going to be a pretty key zone as well between 224.28 and 225.13. Let's go back and mark up, again, Tuesday and Wednesday low of day, that zone between 226.93 and 227.11, and then this upper zone of resistance, okay? Now, let's go ahead and look and see where BA is at. Well, BA is down a lot, right? So, we see it just completely right through every single zone that we identified, every single level of support. But here's the cool thing that I'm noticing is, yeah, we dumped on off pretty hard and heavy. When we started to bounce on back up, did we respect these areas as resistance? Well, yeah. I mean, we fell into this lower zone, and you see a few of these lower shadows here. We tried the bounce. There were buyers present. You see some of these lower shadows here at that zone. There were buyers present. So we're just validating the zone based on price action and how we did around that level. See how we cracked below it, then it turned resistance for a little bit. How we got back above it, that zone turned support. Into this upper zone, resistance, resistance, resistance. Now we're pulling back into this lower zone. We could clearly see that these daily zones that we just identified are extremely respected, even in post-market and pre-market. So it even just validates these areas even more, and it really gives me a lot of conviction that these levels are going to be respected. So here's one other thing I want to do, is I want to get another lower zone, right? And that's going to be the gap fill, right? So we have this gap that could get filled, right, all the way down towards around like 215.90, yeah, 215.95. That's going to be that high prior to that gap up. So you can see that there is a pretty big gap here on BA. So if we see BA fall below and stay below this lower zone, that would also be falling below and staying below the 50 SMA. We could actually look for a gap fill down around 216 on BA. If we fail to hold this 221.55 to 222.20 level. That's also the 50 SMA on the daily. We fail to hold this very key area of support, right? We can definitely see BA come back down towards around like 216, right? But if we hold this zone, we know we have potential into that next overhead zone between 224.28 and 225.13. And so here's a couple things that we can expect to see here today on BA. I'll give you guys a couple breakdowns on what we could see and what would make for good trades, right? What do we have until market open? About 19 minutes, so anything can happen. But massive leg down, got back above that lower zone, held a support, came into that next zone. We're holding below it as resistance, and we're pulling back into this zone of support. And remember, this zone right here, let me go ahead and do this. Let me mark it up in purple so you know that this is that key level, right? Because this is a key level. Let's just mark it up in purple here. That's a key level, right? Purple. So if we are able to hold above this zone, that's a key daily level. It's the 50 SMA, and you see how key it was. And again, we identified it from the daily. If we do, for some reason, see BA holding above that level today, that would give us a big higher low at a daily support level, and it's a key daily support level. That could give us a nice little push on up into this overhead level of resistance. And again, that zone is between 224.28 and 225.13. We could see a nice higher low push off that zone back on up to that 224.28 to 225.13. Okay? And if we ever see that zone break and hold, then it's going to be back up into yesterday's low of day, right? That zone right around 227. So if we see something like this take place, we know what we can expect. We can expect to see a higher low develop at this key daily zone of support and push into our next level of resistance. We push and hold that level up towards around 227. We push and hold that level up towards around 230. But to the flip side, you know, what if we see BA opening below this zone? Right? And we push into it and we can't break above it, and it's more or less resistance. Well, hey, I want to get short, right? Because now we're falling below this key daily support level. We would be pushing into it and holding below it as resistance. So if that's what we see here on BA, where we gap below this zone, right? We gap down under the zone today, open on up, push into it, but fail to break above it. That's when I see great potential to get short down towards around 216. To fill this daily gap to the downside here on BA. So the more I look at BA, the more I actually like it, right? On the daily, I'm like, okay, nothing really at first glance. Let's move on. But the more I take a look at it, the more I really like it. I like this increased volume sell-off, decreased volume bounce, back into resistance. We're gapping down massively today. We're respecting these daily zones that we've identified. And so I think there's going to be some good potential today, whether that's a higher low push off the zone of support for the leg on up, or whether we open below this zone, push on up, hold below it as resistance, and essentially get that gap fill down around 216. I still think there's great potential, whether we see the setup long or whether we see the setup short. So your line in the sand, go ahead and wrap this up on BA. Your line in the sand, your make or break level today is going to be this zone between 221.55 and 222.20. We hold above it as support. We play calls. We fall below it, stay below it as resistance. We look to play puts, right? So keep that level on high watch today here with BA. Pick up Boeing. Tyler, what's up, dude? Let's go. Let's get it. What time is it? It's 9:14. All right, so we got about 3 reviews. That's not too shabby. Moving the needle here a little bit. All right, cool. So let's give you guys the complete breakdown on the SPY, okay? So again, you guys now know how I identify my levels of support resistance, right? And if you guys don't know what my process entails in the morning to identify these zones here and how I come up with these zones, then what I would really recommend you guys do is watch this video. I did a recording, I think it was yesterday, but this video right here is going to give you guys a complete breakdown and a complete overview of like what my morning process entails, right? How do I identify these zones? How are these zones extremely respected like 80% of the time? And why am I super confident, you know, in my ability to identify these levels, wait for the market to come to one of these levels, and then base trades off of these levels, right? To give me some high probability outcomes on my trades. So yeah, check that out. That's going to give you the full breakdown on how I'm identifying these zones. But let's just give you the breakdown, right? First zone on the SPY is between 443.06 and 443.90. We got yesterday's close, yesterday's high day, and we're connecting a lot of this other prior daily resistance and support as well. So that's going to be our first key area to be paying attention to. If for any reason we're below this or falling below this today, we can definitely come back down into yesterday's low of day and yesterday's open. That puts you down around 239.10 to 239.24. Right? Next overhead zone that we have identified is going to be up between 447.38 and 448. And then, right, I know there's going to be some resistance along the way up, right? There's going to be another area of resistance right around here. Right, as we all can see, we have spiking high, high a day rejection. We break and retest, retest, crack and retest, crack and retest. So we can see that this zone is going to be a pretty key level as well. That's between 451.36 and 451.74. But then we could start targeting this gap fill to the long side. That's if the SPY still continues to move to the upside. If that's buyers and bulls are stepping back in, regaining strength, right? You could see the SPY get back up towards around that daily gap fill at some point next week. It's very, very realistic. But at any point in time, we see the SPY getting rejected off one of these overhead levels of resistance and we top on out, start to roll on over, I'll be looking to catch the short for the next leg down if we see a solid reason to get short for the next leg down. So these are going to be your key daily zones of support resistance right into the 5-minute time frame. Where are we at? We're right in the middle, right? We're right in the middle of these two zones. So again, we know the game plan, right? We know the drill. We know exactly what we're doing. What are we doing, right? We're waiting for the market to come to us. One of two things are going to happen, guys, right? The market's going to open, come down into support, and then one or two things happen. We hold it as support and we play calls. We crack that level, retest it as resistance, we play puts. That's it. We already know where the market could go to the long side next. We know where the market could go to the short side next. So again, this is going to be a key level to be paying attention to right at the start of the day. If you open and come down into this level, one of two things are going to happen. You're going to hold as support. We get a reason to get long, we get long. Where to? This next overhead zone of resistance. Okay? If we come on down into the zone, we fall below it, come back into it, stay below it as resistance. Okay? What could we look to do? Play puts on down to that next zone of support, okay? That's idea number one. That's one thing that could happen if we do drop off initially into this lower zone of support. However, what if we open and just rip straight up into this overhead zone of resistance between 447.38 and 448, right? One of two things will happen. We come up into that zone. We top on out, and we get indication for puts. We look for the short down to this lower zone of support. Or we open on up, eventually get above that zone, hold it as support, and then, hey, the SPY's like, I want to move higher. And then we have room into the 450s, up towards around 451, right? So these are going to be your two main levels to keep on watch today, right? And you're right in the middle of these two main zones, right? So your main area of overhead resistance is that zone between 447.38 and 448, right? So keep that on high watch, right? Something's going to happen there. We're going to squeeze up into it, top out, roll over. You get confirmation for puts, or we break it and hold it, then we simply play calls. But that's going to be a key area where there's something bound to happen, right? At least some kind of opportunity presenting itself. Or we open, come down into this lower zone of support, okay? And if we hold above that 443.06 to 443.90 zone, we can definitely see the SPY move higher today and push, right? If we ever fall below that zone and stay below that zone, we know we have room back down to this 439.10 to 439.24. And so that's on the SPY. So if you really look at the SPY, this purple box, I'm going to highlight it in purple here. This was a key level that we've been talking about since Monday, right? This is a key level of daily resistance that turned support, that turned resistance. We cracked below that zone with force, right? We had an increase in volume along the leg down. We see a slight decrease in volume along our leg up, back into that zone. We were talking about this as being a daily crack and retest for the next leg down, right? But obviously, we're above that zone right now, so that would technically invalidate the crack and retest. Agree? But here's one thing that stands out to me. When I go take a look at like ES, right? Or I go take a look at, SPX, the S&P 500 index, I actually see that both of these are below that zone, right? So you see that high rejection, higher low break, right? That zone right here off these highs that turns support resistance before the crack. Take a look at SPX. We're technically not above that zone. Take a look at ES, right? Same zone, right? High, rejection, higher low, breakout, pullback, support, 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 okay? We cracked below it. So that's the same zone, right off these highs prior to the breakout, and then it turns support before cracking last week. Take a look at the spikes, the same area, okay? High, rejection, higher low break, turn support before the crack below it last week. If you take a look at the SPY's above that zone, right? So you would think, hey, the SPY could hold it and push higher. But take a look at ES, right? Take a look at SPX, right? The index. We're actually below that zone. Take a look at ES. We're still technically below that zone. So when I look at the SPY's gapping up above that zone. That leads me to believe that could be a solid support level that we could push off of. Wouldn't you guys agree? That's a key level of daily support resistance. Okay, we're above it. We would believe that the SPY could pull back into it, hold it as support, and push higher. Correct? Correct. But here's the deal. When you look at SPX, we're actually not going to be above that zone. When you take a look at ES futures, right, the S&P 500 futures contracts, you see that we're actually not above that zone. So that's still going to be a key area of resistance if you're watching ES or S&P 500 futures. If you're looking at SPX, the index, that's still a key level of resistance. So I want you guys to focus on SPX today along with the SPY, right? Because there is a little bit of a different story being told. The SPY is indicating a gap up hold for a possible push above that key zone, okay? But when you take a look at SPX and those futures contracts, the story is, hey, we still haven't broken through that zone yet. It's still going to be overhead resistance, and that's an area where we could hit, top out, and store all on over, which would pull the SPY back, obviously, as well. So I really want you guys to focus on ES, SPX, and the SPY today because there's a little bit of a difference in the location based on that key zone, as we all can see firsthand. So I'd like to see the SPY die as well. So obviously, I'm putting a lot of focus today on this zone, if we're looking at like ES, between 44.86 to 44.98, right? That's that key overhead zone of resistance. Take a look at SPX. This key overhead zone of resistance is between 44.48 to 44.58, okay? So regardless of what the SPY does, okay, if we see SPX in this zone intraday topping out, rolling on over, we see ES in this zone today topping out, rolling on over, I start to think I'm getting short on SPY, right? Even if the SPY for some reason is above this purple zone that we identified, if I see ES topping out and rolling, SPX topping out and rolling off those overhead key zones of resistance, even if the SPY is above that zone and we think it's support, I'm still looking for the short today, expecting the SPY to fall below that zone, stay below that zone, and see that next leg on down, guys. Does that make sense on how we're looking at those two additional assets, just looking at the index today, ES, in conjunction with the SPY, just to make sure we're on the right side of the trade, okay? That's all we're doing, right? Just to keep it super simple, make sure we're dialed in, we know exactly what to expect, all right? So that's going to be the game plan today with the SPY, right? The SPY is going to be opening above that zone, but like I said, SPX looks like we may be opening below this zone or in this zone, but definitely if you look at ES, you look at these futures contracts, we already have a printed daily candle, right? We've already pretty much come into the zone, right? And we could still push up a little bit more, but there is still going to be a lot of overhead resistance that we could stay below and start to see that next leg down, which would pull the SPY below this zone and see its next leg down as well, back down to like yesterday's low of day and yesterday's open, right? That lower zone between 439.10 and 439.24. So that's how I'm going to approach the market today, right? I'm going to pay attention to the futures contracts. I'm going to pay attention to the index, SPX, and then I'm going to be referencing with the SPY as well to make my trading decisions for the day, just to make sure I'm on the right side of the trade, guys. That's it, right? We reviewed Amazon. I do like Amazon the more I looked at it, so I definitely want to keep Amazon on high watch today. You guys are all set, ready to rock and roll there. Took a BA. BA looks really good also, right? I do like Boeing, so we're going to keep that one on watch. Tesla. So you got this overhead zone of resistance right now. We can clearly see that this is going to be a lot of resistance, right? Daily lows prior to that big rip. Right, we cracked below the zone, hit it as resistance a couple times last week, and then just here on Tuesday, we had our gap up open, high a day inside of that zone before our big drop on off. So that zone on Tesla is between 240.25 and 240.87. And we can see that it is a key level, right? Support prior to that nice big move on up. Okay? Came back down into it. We tried to hold this day, but we gapped down the next day and held below it 2 days back-to-back as resistance. And then again, just here on Tuesday, we have a gap up, open, and a higher day right in that zone, literally hitting those levels to the penny prior to that drop on off. So this is going to be a key level overhead. Okay, and where's Tesla right now compared to this zone? In that zone, again, between 240.25 and 240.87. We're actually below it, right? So we came up into it, chopped around it, yada, yada, yada. Tesla was moving because the SPY and the Qs were moving, and, you know, NVIDIA soared on earnings up 8%. So, again, we saw Tesla get pulled up with the overall market, but it looks like we're going to be opening below this really key daily zone at the start of the day. And so this is our make or break on Tesla, guys. Like, this is our line in the sand, right? If we are able... I don't even know what just happened there. That was odd. Be good. Yeah, so if we are able to, again, open below that zone, push into it as resistance, and we fail to break above it, I want to be getting short today on Tesla. This is a key daily level of resistance. And if we open underneath of it, push into it, and fail to break above, and we top out and start rolling on over, I absolutely would love to get short on Tesla for the next leg down. But to the flip side, the market's going to do what the market wants to do. If Tesla opens below this zone and we push above it and eventually hold it as support, then I simply look to play Tesla long today. And I just trade with the market, not against it. But this is your line in the sand, ladies and gentlemen. This is your make or break. Okay, if we stay below this zone, I mean, we have a lot of potential to see Tesla get back down towards around yesterday's low of day, yesterday's open, as well as Tuesday's low of day. Now, are there going to be pit stops along the way down? Like, is Tesla going to go from 240 to 229? Right? Is Tesla just going to go straight down 10 points? No. Right? There will be pit stops along the way down. Right? Like, a pit stop will be right here. Give me a sec. I gotta change the template right there. Yeah. So I mean, between 232.63 and 233.16, obviously that's going to be an area that we can come down to today and hold and bounce. You got to look at yesterday's levels as well. You got to look at yesterday's high a day. You got to look at yesterday's close. These are going to be some profit-taking levels. These are going to be areas where Tesla can bounce. Right? Just go look at yesterday's high day. It's holding on up in post-market and pre-market. Okay. Then we know that there was another pit stop to the downside. That pit stop to the downside is yesterday's close. Then down into this pullback low from yesterday. Then down into that zone we just identified. Then back down to yesterday's low of day and close. So yeah, does Tesla have potential to go from 240 resistance all the way down to 230? Absolutely. That's the next major level of support on Tesla. But there will be some pit stops along the way down. And those are just going to be our profit-taking levels, right? So yesterday's low of day and close, not low of day, my bad. Yesterday's close, that's going to be a pit stop. That's an area to take profit. That's 236.84. Then this pullback low, that's another profit-taking level. That's 235.28. Then this zone that we just identified on the daily between 232.63 and 233.16. And then we can see it back down towards around the low 230s. So yeah, there are going to be some pit stops along the way down, but our main target, our final target, right, where we can definitely see Tesla come to today or maybe even by tomorrow, would be back down at this lower zone of support between 229.28 and 229.58, guys. All right. So just wanted to make sure you guys were all set, ready to rock and roll there on Tesla, as Tesla is one of my top stocks to watch for the day. I like it a lot. Think there's great potential. Let's see what happens here with Tesla at the start of the day, guys. You know exactly what your key levels are, what you want to see take place. And so we are all set, ready to rock and roll, right? Amazon, we're fully prepared there. BA, again, already holding a higher low off that zone. If you're interested in BA, your trade may be right now out of the gate, guys. Okay, keep that one on high watch. So take a look at SPX today. Compare SPX to the SPY real quick before we start diving into the day. The SPY is gapping above that key zone of daily resistance, daily support. Okay? That key zone that we can all agree that is a pretty key level. Okay, the SPY is gapping above that level. You would think that we could pull back into it, hold it, and push. That's typically what we see. But now go take a look at SPX. SPX is actually opening in this zone of resistance. So if we fail to hold that zone and push higher with SPX, right, the SPY is going to fail to hold and push higher as well. So don't be deceived. Don't be like misled, right? The SPY looks like it could gap up, which we are, pull back into that zone, hold its support, and then go on its next leg up. That's what you would think. That's what I think when I look at it. We've seen that play out several times, right? But when you take a look at SPX, you can see there's a lot more work we really have to do in order to really see that next leg up, because SPX is still stuck under a lot of that daily resistance. Okay, so just be mindful of that, guys. But again, we are all set, ready to rock and roll. Let's have a fun day. Let's have an amazing day, and let's crush it. Let's take some amazing trades and watch the money flow on into those accounts. Let's get with it, guys. Yeah, so did Steve post the options this morning on NVIDIA? Yeah, go ahead and grab those NVIDIA options chain and repost. I know Steve did a screenshot yesterday, and we were going to do this as a learning experience, right? So what did we see? What's the gap up on NVIDIA? Well, yesterday, we closed at what? What did we close at yesterday? Like 470, right? And today we opened at 5. So those contracts went up $30, right? So if you had calls yesterday, the stock gapped up $30 to the upside. You would expect that those options went bananas, right? That you should be making a crap ton of money. I mean, come on, right? NVIDIA just opened $30 to the upside. That's insane. That's 7 to 8% of a gap up. Nuts, right? You would expect those options to have just absolutely went bananas. Okay, but we were talking about an IV crush and theta decay yesterday, and just how, right, you can get a big 30, 40, 50 point gap up. And I would almost guarantee that those options are still the same premium, if not down, right? You would expect to be up big time, but I wouldn't be surprised if those contracts went back down below what they were worth yesterday just due to the IV crush alone, even though the stock spiked up and gapped up 30 points. So let's compare those two. We got here is today on NVIDIA. Let's go look at yesterday as well, Steve. Do you still have that screenshot from yesterday so we can see them back to back? Trying to see if I can find. Okay, so here we go. All right, so here is the post from last night. And again, this is just a really good learning experience for you guys that are starting to dabble and get involved here with options, right? A lot of traders asking me, hey, would you buy calls through earnings, right? I expect the thing to gap up and squeeze. Like, yeah, even if it squeezes, that doesn't necessarily mean, right, that you're going to make some money. So check this out, guys. NVIDIA gapped up how much, right? A lot. Let's just call it 20 points. We're still up about 20 points right now, right? Yep, we're still up about 20 points from the close. So yesterday, right, if you were looking at for example, let's look at a 475 call. Yesterday, the 475 calls were at $2,100 end of day. Right now, the 475 calls, well, I can't see that. Let's go 480s. Yesterday, the 480 calls were $1,880. Right now, the 480 calls are $1,810. They're down. Yesterday, the 1480 calls were at $1,800 end of day. $1,880. Right now, the 480 calls for Friday, what are they at? Right, $1,810. They're down, right? The stock opened 30 points higher overnight, right? Your contracts are still down in premium. How could that be? Look at the implied volatility. Yesterday, the implied volatility on the 480s, they were at 160%. This morning, NVIDIA opens after earnings. The implied volatility went back down to normal. The 480s are now at a 91 IV. That is an IV crush. Okay, so yeah, the stock moved $30 to the upside. You would expect to be up a shit ton of money, right? Just take that delta, multiply it by, $30 to the upside, and that's going to give you an idea of what every contract should have went up by. Why did they not go up that much? Right? Why are they down right now? Well, because your implied volatility went from 160% right before earnings back down to its normal of 90% after earnings. That's what we call an IV crush. So you would think as a newer options trader that I should be up substantially right now. NVIDIA is still up big. It's up 5%. I should be eating right now on profit. You're actually down, losing your butt probably because you weren't aware of how important and how impactful the implied volatility is and what it represents. And, again, how it's at its highest level right before earnings. So, again, the IV crush alone completely destroyed those contracts, right? The stock's still up from price per price, right? The stock's still up 30 bucks, but those contracts are down right now and still fading and falling because that implied volatility will go much lower than 98% today. I would be pretty certain that the implied volatility will probably find its, settling right around like the high 70s, low 80s. So I do expect the implied volatility today to still drop on off with NVIDIA, which is going to continue to really just eat away at those option premiums. Yeah, Corey, Ivy can be a real, sometimes it can be, man. It can be. But yeah, I had a lot of traders hitting me up. A lot of people even this morning were asking about options and, taking calls on NVIDIA. They're going to be up big time. And I'm like, I don't think you're going to be up big time. They're like, what do you mean? The stock's going to open 40, 50 points higher than where it closed. What do you mean? I have calls. What do you mean it's not going to go up in premium? Explaining the IV to them. I'm like, just watch. Watch those contracts actually open lower than what they were worth yesterday, even though the stock's up 30 points, right? That's how important it is to, be mindful of what the implied volatility is, especially if you're looking to trade anything overnight through earnings, right? It's got to really understand how impactful that is, right? Because again, we did not take a trade on NVIDIA last night simply because of that reason alone. So hopefully, right? Hopefully that right there allows you to be a little bit more mindful when approaching future trades to not make, like bad decisions and just get crushed by taking a trade overnight through earnings. Even if the stock is expected to make a big move, the IV alone is going to crush it. So what do you need to do in those scenarios? You can't get in the day of or the week of. You need to be looking to get in 2 weeks out when the implied volatility is still at 50, 60%, right? So you're looking, okay, NVIDIA earnings in 2 weeks, right? From right now until earnings, the implied volatility will go up. So if I'm looking to take a trade through earnings, I need to be getting in at least 2 weeks early when the implied volatility is still at its normal 60, 70%. And as we get close to earnings, the implied volatility goes up, which should help push me in the right direction, right? Increase the premiums of those contracts. And at least you're sitting a lot better if you're going to hold it through earnings or if you're going to close right ahead of earnings. But that's another way to get involved in stocks and trades leading up to earnings, not taking it through earnings, but leading up to earnings. And instead of getting hit with an IV crush, you experience an IV pump, where, again, the premiums will inflate in value in your favor just because of the increase in the implied volatility. Yo, Mr. Anthony's in the house. What's up, dude? Good morning. Yo. What's up, man? How you feeling today? Feeling pretty good? Oh, yeah. I love it. I mean, if you take a look at everything, Apple pulling back out of the gate. Tesla really pulling back out of the gate. BA, same thing, dropping on off. Amazon really starting to drop on off here as well, guys. So at least we know Amazon's cracking below its level of support. If we can see Amazon push back into that zone of resistance, stay below it, we could start looking to get short down to like 134 on Amazon, guys. So let's keep Amazon on high watch. Let's bring that to the top of the watch list. I also want to be watching Tesla. Tesla out of the gate, straight down, but we're coming down into this lower zone of support as well. And I'm curious to see if Tesla's going to bounce off this level or if Tesla's going to crack this level. If Tesla comes down into the zone and we hold, I want to be looking to get long on Tesla. But if we can see Tesla fall below the zone, retest it as resistance, then yeah, I want to be getting short down to that 229 because we've already fallen like 6 points out of the gate here on Tesla. So this is going to be the key area that I'm keeping on watch here on Tesla. This zone between 232.63 and 233.16. Whatever takes place at this zone, it should give us something as far as like seeing a really nice opportunity present itself, guys. So let's keep that on high watch. And then when you look at the SPY, you're like, okay, Josh, well, the SPY is gapping up, pulling back into yesterday's high and close, right? We're coming down to close the gap. That's the level of support. Could I be looking to play this long, right? To the long side? I would normally say yes, absolutely. We're gapping up. Let it come down into the prior day high, the prior day close. Let's see if that level holds as support. And if so, let's play it long, right? Normally, that's a go-to. But when you take a look at SPX, right, the S&P 500 index, we're actually still underneath that zone as resistance. You take a look at ES, we're still underneath that zone of resistance. Meanwhile, the SPY is above that zone. So would I actually look for a long on the SPY? No. Normally I would. Absolutely. Right? Normally I would, because that's a good gap up, close the gap, bounce off that level, and then push higher. But when I look at SPX, still under resistance. I look at ES, right? Still under all that daily resistance. I'm going to hold off on playing calls on the SPY. I'm actually going to see if the SPY can fall below that zone and stay below it as resistance. That would make sense, and that would be in line with what we see on SPX and ES. So that's how we adjust, that's how we pivot, and that's how we adapt to the market, guys, to make sure we're always on the right side of the trade. So definitely keep that on watch. Okay? I'm not looking to play calls in this lower zone of support. I honestly want to see if we can fall below it, right? Stay below it. Look for a good short today on the SPY. All right, let's get it, guys. We are live. AMC is still not shortable. It's still restricted on my end. So no shorts today on AMC, but we ever see a solid bounce, I mean, I wouldn't be opposed to trying to catch it for a solid bounce, but let's see how it continues to play on out. Right now, my go-to is Tesla. This is the #1 stock that I'm going to be watching right at the start of the day, right? Just kind of sitting back on Amazon, looking to see what we do back up at this overhead zone of resistance. Kind of the same thing with Apple, just looking to see what we do coming on up. No reason for a trade. BA, I'm very interested in BA as well. So I'm liking Tesla right now. Tesla looks great. Want to keep a lot of focus there. And then BA looks pretty good as well. That purple zone, right? That key zone that we identified, our line in the sand. What did we do? We came down in pre-market. We held it. We had a nice little push out of the gate, but right below it. So if we return to that zone and stay below it as resistance, I would look to get short on BA down towards around 216 to close that daily gap. All right. So right now, BA on high watch here for a possible short back up between 221.55 and 222.20, that overhead zone of resistance. And then Tesla, I'm just looking to see what it's going to do at this lower zone of support between 232.63 and 233.16. Like, if we can fall below it and stay below it, a little bit of an intraday crack and retest off that daily zone, I would love to get shorts down the 230 on Tesla. But if for some reason we hold above this zone and we look strong above it, I wouldn't be opposed to looking for a long as well. But I want to see how we play out over the next couple of minutes at this lower zone of support here on Tesla. So right now it's Tesla and BA are my top two watches right now. Tesla and BA are my top two watches. So Tyler, would I look for a bounce off yesterday's high day on QQQ? I wouldn't personally, and the reason that I wouldn't personally is simply because, like, when I look at the SPY, I would look for a bounce off yesterday's close and high day on the SPY normally, as that being a great area after a gap up. But when I look at SPX, right, the index, when I look at ES, S&P 500 futures, we're stuck below all of this resistance, and we have limited upside on the bounce. Right? We have more overhead resistance than lower support. So I would pass on any long opportunity out of the gate, at least on the SPY. And since I would pass on the SPY playing it long, I would have to pass on QQQ as well for those reasons. until we get a little bit more like validation that like these levels are going to hold, right? If we see these levels hold, then, you know, so be it. They hold, we get confirmation to take it long. But simply because SPX is sitting below all that resistance, I'm going to pass on playing SPY long off yesterday's close and high day. And I'm also going to pass on trading QQQ long off yesterday's high day and close as well, based on those reasonings. So if you would have tried to catch the bounce on the Qs, I mean, you're already down quite a bit trying to catch that bounce off yesterday's high a day, right? That was at 370.26. I mean, it just came right below it. It tried to hold, but then right below it. I'm kind of expecting to see the same thing happen at yesterday's close. We come down to it, tried to hold it, and just right below it. Those are my expectations. It makes sense when I look at SPX. It makes sense when I look at ES. So we'll see. We just got to play it by ear. Just give it a little bit of time to really confirm and really set up. That's it. Like, let the market come to you. It is. And then really wait for there to be a solid reason to pull the trigger and get in. So again, I'm flat on the day, guys. Right? It's 9:47. No pre-market trades. No trades yet out of the gate. Literally just looking for the one and done, baby. Looking for the one and done. Tesla giving pretty much, or no, NVIDIA pretty much giving everything back. Right? Pretty much giving everything back on NVIDIA. And it is coming into a pretty solid support level, though. You see all of this prior resistance, all-time high resistance, all-time high resistance. This zone between 480.86 and 481.89. This is going to be a pretty key level here on NVIDIA to keep on watch. Okay? If we come on down and we hold this lower zone of support, we can see a nice little bounce on up. Right? But if we ever fall below that zone and stay below it as resistance, you best believe I'm getting short on NVIDIA today, guys. So we shall see. We shall see. And honestly, I'm waiting as well for those IVs to settle down, the implied volatility, right? 15 minutes out of the gate, they should settle. So look at the implied volatility now on those option contracts. Had they died on off a little bit more? At the start of the day, they were at like 94%. I would assume they're probably below 90% now, if I'm not mistaken. Yeah, look at that. They're already below 80%. So they've already fallen another 10%. So those contracts are still just dropping on off. And they'll probably, again, return to that norm. And that norm's around 70%, 70 to 80%. They've already dropped off another 10, 15% of those IVs just in 15 minutes. So again, on something like the video, let the options settle. Let them settle. Let the implied volatility find its baseline. Let everything calm down. Spreads tighten up. And then let's see if there's opportunity on the video. Still pretty high, but at least they're coming back down to the north. It's good. All right, so good old Tesla. Tesla, Friday expiration. Maybe calls off this lower level of support. What is the SPY doing? SPY sitting right at that daily zone. The Qs coming on down into yesterday's close. That could be an area where the Qs bounce. The SPY sitting right at its zone as well. We could see a possible bounce. Again, I'm not looking for calls on SPY or Qs. Just looking to see where they're at location-wise. If I see the SPY near support, hitting support and bouncing. If I see the Qs near support or hitting support and bouncing, that makes me a little bit more confident to take Tesla off of a support level as well for a possible bounce. If I see potential for the SPY and the Qs to hold and bounce as well. But if I see that the SPY and the Qs are cracking support and getting ready to dump and fade and fall, I'm going to pass on taking Tesla calls at a support level because Tesla would get pulled down with the broader market. So we see the SPY holding on up for whatever reason and bouncing. We see the Qs come on down to yesterday's close, hold on up and bounce. I mean, take a look at Tesla. Tesla's sitting right at that lower zone of support. We can see a nice bounce. I'm getting ready to pull the trigger on some Tesla calls here for a quick scalp, guys. Maybe not because my keyboard stopped working again. Okay, 10 contracts, not 100, 10. Whew. You don't want 100 of those. So I already know that if the Qs start to pop and bounce here, I already know Tesla's going to pop. Ah, fuck me. Excuse my language. Like, I'm being a little too picky with the Qs. Like, I'm literally getting ready to pull the trigger. I flip back over to the Qs real quick, and Tesla's already made a dollar bounce. Dang it. It's okay. I do that a lot. I try and over-educate it, and I always end up... Yeah, I just always focus on the education aspect. Try to give you guys the full breakdown as, like, reasoning behind trades and what I'm doing, and I tend to miss trades. That was a quick little dollar pop there, but if it's going to set up and truly reverse today, it'll continue to set up for us and provide us with another opportunity. So... So again, I'm still just watching the SPY, watching the Qs, referencing these two, seeing where they're at, how they're moving, to really try and back up a solid trade here on Tesla. So right now, I'm still tradeless. I'm hands off. Looking to see if, like, this is a solid reason to be getting in on Tesla at this lower zone of support. Looking to see if the SPY is going to be able to hold on up here and maybe bounce. The Qs already came down and had a pretty decent little bounce there. So we might see a short-term little pop on back up with the Qs. Makes sense. Coming down, bouncing off yesterday's close. SPY right now is actually trying to hold above yesterday's high a day. We can see. We're trying to hold above yesterday's high day, which we are. And then we got Tesla holding that zone as well. So I'm going to take a stab on Tesla here. But I still want to put a lot of focus here on the Qs, and I want to put a lot of focus on the SPY. Like, I know where my entry point is based on Tesla's price. So I can literally just watch Tesla's time and sales level 2 without needing to look at the charts. I know I want to see it stay above 233, so I'm just literally watching the time and sales level 2. If you fall below 233, I get out, but I want to put some focus on the Qs. See, the Qs have a nasty little drop. I want to start getting out of Tesla. Tesla trying to pop on up a little bit. And just catching it at that lower zone of support. And the Qs are trying to pop and bounce as well. But now the Qs are starting to pull back a little bit. Give it a few more moments. I know I don't want to see Tesla back down in the low 233s. Ideally want to see Tesla hold above 233.50 and start to push back above 244. We're up like $80 on the... Nothing crazy. Small position as well. Only 10 contracts here. Let's see, there are Qs, QQQ, trying to pop here a little bit off yesterday's close. You got Tesla holding above 233.50, still looking pretty good. There's the, okay, cool. Tesla's getting a nice little pop here. If we see Tesla back below 233.50 now, I'm going to just trail my stop loss up, guys. I'm going to trail my stop loss up a little. Nice little pop, nice little bounce. Let's take half. Oh, shit, I meant to take half. I sold the whole trade. Jesus. Not even freaking paying attention. All right, I guess I'm out. I meant to close half my position. I only closed... Oh, I meant to close half. I closed the whole position on Tesla. So it's okay. Maybe everything works out for a reason, right? Maybe not. Maybe it does. I don't know. I only wanted to close half the position and then go stop at break even on the other 5 because Qs are still looking good here. And Tesla's getting ready to break 254, but I accidentally closed the entire position, meaning to close half. So... made a quick 190 on the trade. Not too bad. We nailed the entry. Took little to no heat. We had like $70 a drawdown at most. Got our entries as close to 233 as possible with stops right below that. And just looking for this level to hold and bounce. And then just scale out at 1-to-1. Right? And that's why I was looking to take 5 to scale out at this 1-to-1. But I closed the entire trade, which it's okay. It's actually working out in my favor to be out of that trade. All right, so now the big thing is, does everybody understand why I took this trade on Tesla? Right, that's like, I always want to make sure that if I take a trade, you guys understand the exact reasoning behind the trade. Entries, position sizing, right? Stops, targets. Again, big picture. Why did you get in? What made you take that trade, right? I'm more than happy to break it down. BA's hitting resistance. Oh boy, yay! Well, you guys know last week I took BA, and BA was a pain in the butt with options. Those options were garbage on BA. Just to throw that out there. Look at the options, look at the spread, make sure they're not as garbage as last Friday, because last Friday they were pretty bad. But if they're pretty good, then yeah, I mean, we are retracing and retesting that level of resistance. You know, it's very, very possible that we see it get rejected here, eventually crack this uptrend, and then start to drop on off. But just be mindful that the options last week were brutal. They were just terrible. Do I find my zones with or without pre-market, post-market data? Without. So I always identify my zones based on the higher time frame. So I start with daily. If I need to go into a weekly or a monthly, I will, just to get an idea of what the bigger picture looks like. But, you know, when it comes down to day trading, I just go back and find the highest probability daily zones of support resistance, and then that's it. Now, if we see like there's like connection points within pre-market, post-market, it just validates that level even more. But I'm not really focused on pre-market, post-market. I'm looking at these higher time frame daily levels because they're going to carry more weight and more significance than a, you know, intraday level, or I'm sorry, a pre-market level is going to hold. So there goes QQQ. Nice pop, but Tesla's still kind of holding flat. Not really getting that pop on up just yet. But overall, pretty decent trade on Tesla. I'm happy with it. I was positioned correctly. Waited for the entry point. Got the entry. Little to no drawdown. Took some profits into that 1-to-1, 2-to-1 move. And that was that. I'm pretty happy with it. Quick little scalp out of the gate. Yo, Zach in the house. What's up, dude? Good morning.
Good morning.
Ooh, I love the energy. Good morning. Let's go, baby. Excited for today?
Oh yeah.
Get it. How'd everything go yesterday, man? Did you get the underwriter to actually close?
Oh man, we went till 4 o'clock Tuesday night.
Oh, dude.
Got to the clear to close, and they told me that they didn't do a home borrowers training, counseling, that they had never conditioned for in the entire loan process.
Oh no.
So my dude was sitting in his truck knocking out an hour-long training to give me a certificate in order to be able to close.
Oh my gosh, man, that's brutal.
I was not happy.
No. Yeah, man. I mean, that wouldn't make anybody happy. That stinks. But it got all cleared up, squared away.
Yeah.
All right, that's
Luckily,
good, man.
My borrower realized it wasn't me, and he said, "I'll definitely use you when we refinance, but you're not allowed to use that lender."
You're like, by then I'll have something else going on, so we're good.
Yeah,
man.
Like, I'm not using that lender again.
What lender was it? Was it like a big bank, or was it like a guaranteed rate type of deal?
No, it was so it's the largest lender actually in the country, UWM. They're actually based out of Michigan, and they're my go-to because they're super fast, super good rates, and I got a new underwriting group, I think I told you, and they just like re-underwrote the loan halfway through the loan.
Oh shoot. Yeah, you told me that.
And I was like, yep, that's not cool when it was already. But yeah, he comes to me, he's like, oh, you don't have a certificate in there. I'm like, I look back at every condition in the history of the file. I'm like, you guys never conditioned for that. And he's like, oh, I'm sorry, but we need it.
Dude, that's crazy. That's crazy.
I'm like, come on, dude. You know they're literally sitting outside the title company trying to sign, and you're holding me up because you guys made a mistake.
Yeah, and now you want us to fix your mistake. Yeah, and holding things up. That's crazy.
It's easy when you're not the person communicating with your client, right?
Right, because they don't have to communicate with the client. Yeah, they don't care.
For sure. So.
Well, at least that's out of the way, man. Right? Some positive stuff there. You got it across the finish line, and now we're here in the market, ready to make it happen, dude. Ready to make some money.
watching SPY.
Good stuff. Yeah, I'm really focused on QQQ right now. I'm watching the Qs at this this daily zone. I'm going to remove this bigger zone overhead. Get that removed. And I'm really watching it, this zone between like 370.24 and 370.52, right? We have daily resistance, 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 gap up, low of day as support. And we can also see here that just Monday, it was the high of day. Pretty close to last Tuesday's high day as well. Got rejected. And then here yesterday, high a day. So we can see that that's going to be a pretty key zone of resistance right now on the Qs. So I'm just looking to see what the Qs do up at this zone. We can get inside of it and stay below it, top out, roll over. I would like to get short back down to like 369 here on the Qs.
Okay.
At least you know what I'm looking at. So if the Qs do not break above this zone, then I'm expecting the Qs to drop, which means that the SPY is going to pull back as well. Let's see. And where is SPX at? Then if we take a look at SPX, the S&P 500 index, we're actually hitting the top end of our resistance zone here. So that's something else to be mindful of as well, guys. It's like, yeah, the SPY may look bullish, right? Where we gapped up, we pulled back into the prior day's high, and now we're bouncing, and you're like, hey, I want to get long because we have potential to flip and rip and move up to 447, 448. I mean, I would agree with you. Just looking at the SPY, that looks super realistic. But when you look at SPX, you're still stuck under all of that daily resistance. So until SPX breaks and holds that upper zone, I wouldn't be interested in taking anything long. SPY or the Qs until we actually see the index, the SPX, being able to break its key level of resistance. Because if SPX fails to break and move higher and we eventually roll on over, well, the SPY and the Qs are coming back down as well. Regardless of how potentially bullish it looks today with this gap up, this retest, and that possible rip to the upside. So putting a lot of focus there on the indexes today.